Hey, good afternoon. This is Mayor Valensky with Driving Markets. Good morning if you're in Europe. Good afternoon if you're in Australia, Asia, and very good morning if you're in the United States. Remember, anything said in this piece is an opinion only. This is Driving Markets, driving while talking about markets. Okay, right, we can't really do a Driving Markets without talking and continue to talk about this potential banking crisis. Now, the opinions are split in two. There's an opinion that this is just a blip. Okay, the SVB, Silicon Valley Bank, and Signature Bank have gone down. They're small banks, they're really irrelevant. A lot of the big banks will pick them up and start taking on the loan books. For example, Citibank is looking to take on the debt or the loan book of Silicon Valley Bank, so it thinks it's good quality loans, and that's going to generate good income for Citibank. Okay, so there's potential vultures floating around looking to pick up the good parts of those banks, whether it's the clients, whether it's retail, whether it's mortgages, whether it's finance, or whether it's loans, whatever. There's plenty of business out there, probably good quality clients at Signature Bank and good quality clients at Silicon Valley Bank. So the question is this just a blip, or is this the start of a crack in the lower level market, not in the lower level banks, not in the JP Morgans and the Bank of Americas and the Morgan Stanleys and the Goldmans? Is this the lower level banks that effectively are in trouble? Okay, so my opinion is that they are. I think there's a lot more to come out of the woodwork, and this is only the start. Is there going to be contagion? Not necessarily at this stage. Remember, the Fed, the US Treasury, and the FDIC is going to back up savers deposits or clients deposits with the banks to add and give that boost of confidence into financial markets, and that's what caused the markets to go up yesterday, caused Bitcoin to shoot up significantly, because once the Fed intervenes, or once the Fed gives, or the US Treasury gives their support and say no one's going to lose money, then that was one of the fears in the crypto sector. So overall, you've got a couple of banks, including Silvergate Crypto Bank, that have gone bust, liquidated, or been closed down. Is that a sign of more damage to come? Now, my opinion, it is. Okay. Now, one of my viewers, Dov, says, don't be so binary in your outlook. At the end of the day, I'm supposed to be analyzing financial markets, and I should not be binary. It shouldn't be just an up or a down. It could be this could happen, that could happen, and that could happen. But I like to be pretty direct, and I like to give my opinion. Another viewer stated, well, what do you know? What gives you the credentials? And I want to be absolutely clear here. They're right. I haven't got the credentials. I've got a bit of experience, but I could be as right as anyone else or as wrong as anyone else. And I'm sure there's thousands of people out there, especially in the corporate world and the banking world, that are more knowledgeable and have got more better based opinions than I have. However, my opinion is that we are going to enter a downward spiral in financial markets. What does that mean? It means that we're going to have an overall bear market in 2023. And I do believe there is a recession coming. I do believe it's going to be worse than 2008. And I do believe that what's going to happen is that the Fed is going to have to intervene again. But that would cause, if it's to do with quantitative easing, that will cause significant inflation and a rise of around about 20-30%. Okay, so the banking crisis has not gone away. It's still there. There's a lot of concern amongst investors and traders globally, but started off in the US. Remember, the banking crisis of 2008 started in the US with countrywide mortgages and the subprime loans. So it started in the US and spread to the rest of the world. And Japan is also delaying its amendment to monetary policy on the back of the banking crisis within the US. And of course, the Fed's very concerned. Another reason why markets went up yesterday, is because there's now a view that the Fed will not raise interest rates next week when they meet up due to the banking crisis. And I think they will increase interest rates by 25 basis points. I don't think they're going to increase it by 50 basis points, even though they would have done, in my opinion, if there wasn't this Silvergate, Silicon Valley, and Signature Bank crisis. It's funny they all begin with S, isn't it? SSS. Okay, I said that yesterday, but it's quite interesting. Anyhow, so I don't think the Fed is going to take draconian action, but I do think they want to maintain some sort of image, and they're probably going to increase rates by 25 basis points likely to do that and continue going forward. It'll be monitored and assessed based on where the crisis is at and how long it's going to run, and if it's only really 2 banks. Now move on to some other news which I'm sure you're aware of, but Facebook or Meta is laying off 10,000 more workers, and it's freezing the hiring of another 5,000. So 5,000 vacancies have been negated, have been wiped off. That's not going to happen as far as Facebook's concerned or Meta's concerned. Mark Zuckerberg is on an efficiency drive for 2023, and what he really wants to do, he wants to get the costs cut right down and get the shares above $202 a share. I don't think it might happen to 202, but I think they're going to come off from there. Other companies that will be under the microscope, semiconductors are normally a good driving or leading indicator as to where markets are at and how the economy is doing. I think they'll actually come off over in 2023. You've got Amazon and Apple. Apple also is running very, very high, likely to come off as well. Let's look a bit on the foreign exchange. So we've had a bit of dollar, was a bit of dollar weakness overall because of the frightening scenario within the banking crisis. There has been a flight to safe haven. In this particular case, it wasn't a flight to the US dollar, it was a flight to US Treasuries, and US Treasury yields dropped significantly on the 2-year and on the 10-year. They've creeped a little bit back up yesterday, but the price shot up on those as investors and traders went for the massive safe haven of US Treasuries, bought the US Treasuries, therefore raising the price, and the yield went down. So the yield is much, much lower than it was on Friday. I have been saying the yield is going to go to 4.6%, but based on the present crisis, I'm not too sure. I could be eating my words on that one. Not too sure it's going to go to 4.6, 4.7%. And also, in light of the banking crisis, depending how deep it is, I'm not sure if interest rates now are going to go to 6.5%. Where beforehand, I was extremely aggressive and bullish on rising interest rates in the US. So you're probably going to have a weaker dollar going forward, especially of the banking crisis. Oil took a tumble on economic concerns, etc. So oil took a tumble, even though it creeped up a little bit yesterday. As Dov correctly says, oil is a great indicator of economic activity. So there's a bit of views. Different analysts will give me input from different areas, and I'm just trying to sum it up here. That's more or less it. So I don't think crypto is going to hold out. I don't think Bitcoin's going to hold out at these levels. I think the dollar's going to go down in the near term. I think yields on bonds are going to stay at this level on the 10-year, 3.6, 3.7% until this crisis is over. This is Meir Walensky with Driving Markets. Share, subscribe, comment. Have a good day.